So in this video, guys, we are gonna be learning about imbalances, right? Imbalance in Forex and overall in the whole area, the whole markets and all this stuff. We are gonna be learning about imbalance. At the end of this video, you're gonna know what is imbalance, what's actually going on behind the scenes when imbalance is occurring, how to use it, when to use it, and all the good stuff. So first of all, I'm gonna start off with explaining what is imbalance. So listen carefully. First of all, imbalance. So like its own name, something is that has a gap between it. So if I just turn on my charts right now, let me just go right here, settings, and have the chart actually right here. So in this situation, do you know what's going to be imbalance? Imbalance is going to be these areas right here. This is going to be imbalance on this time frame, this. And on, if I up the time frame a little bit, now this is again, keep in mind the 15 minute. If I go to 20 minute, as you can see, the imbalance kind of is not the same, but still, it's still there. So what is imbalance? So first of all, imbalance occurs when the big institutions are basically buying or selling pretty hard. Okay, like pretty big amounts, and a lot of orders are injected into the market. So for example, like in this, I'm gonna use this example. Maybe just go a little bit on higher time frame, like the 30 minute. Yeah, I like the 30 minute. So for example, as you can see, at some point we came into here at this level. This is at 0.01. At some point we came here, and then what happened there? As you can see, the market makers, the market movers, the composite man, you can call it whatever you want, the institutions, the banks, injected a lot of orders right here to take the price down. Now, upon injecting the orders and just actually pretty hardly selling the market, as you can see, they left inefficiencies. Like when there was only that downside move. Okay, so for example, as you can see, like if we just go on the line, as you can see, this is a big downside move. And on the candle side, this is right here. And also we have imbalance here. And yeah, overall in this time frame, just right there. On the 1 hour, as you can see, it's pretty much only this area right here. Now, do you know why this area in this situation is not an imbalance? I mean, because on the both sides, as you can see, we have wicks. Okay, we have wicks. This is the wick from the previous candle, and this is the wick from this candle. So that said, this is we may. I don't see a balance in here. Maybe just a small amount, but yeah. So in this sense, this is not imbalance, right? This is imbalance on the 30 minutes. Now it's always up to you how you're going to use it, right? You may count this as imbalance on the 30 minute. Then also keep in mind if you go on the higher time frame when you're trading, when you're behind the charts, you're going to keep in mind that okay, here I have imbalance, so the price may do this before it comes down to what? As you can see it right now, the price is just filling what imbalances. This imbalance right here, this fair value gap. You can call it whatever you want. Fair value gap, imbalance. It's always up to you. Now, more likely than not, do you know what we are gonna do? As you can see, we already kind of are feeling the imbalance, but we have a big chunk of it. So I think this is going to be the case that we're going to move. But again, this is obviously just my own opinion. But now, um, how can you use imbalance? First of all, like for example, let's just go with this example right here. We got this imbalance right here. As you can see, the price broke to the downside, and as we said, where is imbalance like between two candles like this and this right here, and we have imbalance, and now we're waiting for the fill. So here, as you can see, we filled the imbalance, right? As you can see here, that imbalance was filled. As you can see, it came back to fill something right here, and then we tapped into a supply area. Now I also have content on my Skillshare page for absolutely free where I explain everything, also on my YouTube channel too, and we're talking about supply and demand areas, but we tap into that supply and we deliver beautifully to the low. So that's just textbook stuff, right? Now, like every single thing that you see right here, like imbalance, when then it's gonna get filled by the market. Okay, it's just not gonna be like they are left un, un, unmitigated or just untouched. So every single imbalance that you see on the chart is gonna get um, touched or just mitigated. What's mitigation? There is a link of a video on explaining what's mitigation, so you can just go ahead and check it out in the link in the description down below when we're finished with this. But on the other side, now let's see how we can use it. Okay, so as we said, imbalance is like, for example, like this thing right here, this right here actually. this whole thing. As you see, this was not mitigated, and this has a higher chance of mitigation. So now, overall, yeah, I'm definitely still bearish on this market, and I'm not going to be actually just trying to position myself long here because it will just not make sense. This is why you cannot just use imbalance and be and think that you're going to succeed in this market because you're not. You're not going to. So that said, how are we going to use it? So you obviously you can just add it into your arsenal. I would like to combine it with more stuff like structured S&Ds, so POIs. You already know order blocks. You can call it whatever you want. Then we have liquidity, breaks structures, and all that good stuff. But overall, in so simple terms, that's imbalance. So when the market, as you can see, for example, here is when the institutions, the market makers, banks sold, we had a pretty big sell to the downside. Can you tell me where are the imbalances right now, like right here? So what did I say? So here we have an imbalance, right? As you can see, it got filled. Here we have a little imbalance that got filled here. And then I see a little imbalance in here. As you can see, that got filled. Then we have this huge imbalance that didn't get filled. But yeah, at some point, the market, like if I go on the higher time for maybe that's we didn't have mitigation there. We actually did with this candle. As you can see, we came a little bit higher than that. And what's actually going on behind the scenes? So now, when the market is selling, like you can go do this on whatever chart you want, you're going to see a big sell down or a big buy up. What's happening? The markets, like as I said, they're injecting orders, and this, the orders, for example, the buy orders that didn't get picked up right here, and then this is why the price or the market makers are going to buy back right here to pick up some more orders or more sales to then take it lower. So that's also another thing which I want you to keep in mind, which is not that big of a deal. Obviously, you can use imbalance without it. This is just an analogy, the fundamental thing why imbalances occur. But again, that's that was another thing for imbalance. What do we have next? Let me just think about it. About imbalances, also you can use imbalance, for example, to count it as a great break. So this is how I personally use it. So if I want to use a POI or supply in the money area or the block, yeah, I will account for a supply. So for example, we got this upside move right here. Okay, so we got this upside move. We got the beautiful supply area, and we have the imbalance. So this is an area which I would love to use. So I love to see imbalance of the order blocks or supply demand area or a POI, which is basically all the same thing. I like to see imbalance there just to kind of tell me that this is just another confirmation for me that this has chance to get tapped and continue lower. In this situation, as you can see, it did not get tapped, but again, stuff like this happens. So let me just find a great. Okay, here we have this. So you can see that we got this up move, down move, right? Up move, down move. In this situation, as you can see, we broke the structure below here. This is the supply area, or POY. You can call it whatever you want, right? And let me just mark it up beautifully. This. Now, why is it like this? You can just go ahead again, check my Skillshare courses. You're going to see why. But overall, I also do see a imbalance there. Now, I would love to use it, right? You can see it right here and here. So this is why. This is like when you see a perfect supply area or PY that I am willing to use. As you can see, it comes in, delivers to the lows. Beautiful. So yeah, that's generally about it for imbalances. Now again, keep in mind you should test it. Obviously, you cannot just go behind the charts and see now. Understand why there are imbalances, because when the orders, again, I'm gonna quick little recall before we turn off the video. Quick little recall. When the big institutions, again, banks, Cement, and all the market makers are selling, they leave these orders that haven't been tapped, and then what are they going to do then? They're going to bring the price a little bit higher, maybe here, maybe here. Now, obviously, this needs to go intact with multiple confirmation. This is just one, and more like than not, they're just going to go to fill the orders and then keep the price down, or and it's obviously trend. So that's generally about it. Again, I use it as in the supply and demand areas. Let me know what are your thoughts about euro US dollar. Again, go check out my Skillshare courses. Again, I do not sell a course, everything is free. Go check the links out, and that's generally about it for the video. Like the video, and goodbye. See ya.